And good morning, everybody, and welcome to the TriggerCharts pre-market rundown for Friday, July 31st, 2020. Hope everybody's doing well. I got to tell you, I'm hot. The office air conditioning is not working so well, so it's keeping the humidity in and it's keeping the heat up. And I came in this morning, it was like 83 degrees and like 300% humidity this morning. Fortunately, you know, in the old days with the studios that you have there, you had all these big lights and stuff like that, right? Well, fortunately, these days they're LEDs, so they don't blow off any excess heat. So we got the office down to about 80, and we're working on hopefully bringing it down to a reasonable level for the rest of the day. Hopefully you're staying safe. Obviously, we have one more thing going on. We have a storm that's approaching the southern part of the United States, actually heading over the Bahamas right now, going to make its way up the East Coast right towards the hardest hit areas with this coronavirus. I mean, if it wasn't enough to have a pandemic, now we're entering into hurricane season, so a lot going on there. And we have a lot to talk about this morning regarding the markets. I'll mention to you before we get started that there is a special offer that anyone that does subscribe to the Commander Series indicator on the trading app store over at TradeStation will get a 4-hour coaching session that is online. You can do it at your leisure anytime you want. We'll send you all the credentials. Just let us know. Send an email to support@triggercharts.com and we'll make sure to get that to you. Also, your stocks we're going to take a look at this morning, so put those in the chat, probably down there on the bottom. You'll see it in your Zoom panel, the chat area. Make sure to put that in there and we'll get to your stocks and your symbols, whether futures or currencies or whatever it may be. Finally, I'll mention this is for educational purposes only. It's not an offer to buy or sell any security. It's not a solicitation of any kind. Education is what it is all about. So with that in mind, let's go through some of the main issues that are going on as we enter into July. And here we are in July. And there's been some pretty wild action over the month. We've seen a lot of short squeezes. We've seen earnings beats on a very low bar. We've seen 3 or 4 of the major technology companies, which consist of about 30 to 40% of the NASDAQ 100, about 22, 23% or so of the about 20% of the S&P 500, a very small component of the Dow Jones Industrial Average. And the announcement last night by Apple to do a 4-for-1 split is going to really impact the Dow Jones Industrial Average. If in fact the Dow Jones Industrial Average got a tremendous amount of its growth over the last few years by Apple's move because it is a price-weighted index, what happens now when we have that stock move from $400 down to $100 per share? The idea was that it's going to make it more easily available for investors who can't buy shares at, let's say, 400. That's not really so true because right now with fractional shares, you can buy fractions of shares at many different brokerage houses at no problem at all. So I'm not exactly sure what the real incentive was for Apple to do this, but I will tell you that it's going to weigh on the Dow Jones Industrial Average. Those people that want to get exposure to Apple, which was pretty much one of the highest exposed positions inside the Dow. And you say, well, if I got the Dow, I got the Apple. Well, not really. So what you're going to have to do is going to be 4 times less as important. You're going to have to go right to the NASDAQ where the market cap weighting, which is what, $1.8 trillion for Apple right now, is going to still comprise a very significant amount. Anyway, we've seen massive short squeezes. We've seen stocks move up in the last number of days, 2, 3, 4, 500%. We're going to take a look at some of those. Anything, electric anything, whether it's from charging, whether it's from cars, or whether it's trucks, have really been on fire over the last several weeks, and for the year for that matter. But really over the last few weeks, anything and small companies that were coming out, whether they were SPACs, like we saw with SPAQ for electric automobile company called Fisker, or if it's some of the other names that we saw, like a Tesla or even a Workhorse, which we've been talking about, which we're going to talk about again today. The big thing in earnings right now is that we've seen, EBITA. That was a big issue. Do we do EBITA? How do we actually report? Do we do GAAP? What's the story? Non-GAAP? Well, in hard times, we start adding things to the EBITA. So now, EBITA, which is earnings before interest, taxes, and amortization, has now had another letter added to it, which is C. Earnings before interest, taxes, amortization, and COVID. So some companies are kind of excluding all the extraneous costs as one-time expenditures in the COVID fight where they maybe had to do PPE, they had to retrofit their factories, they had to do some work that people were not on board, higher costs, factors related to work, one-time payments in addition to salaries to make sure people are bonused for working in hazardous conditions. So there's just a lot of really weird stuff going on out there. Earnings right now, the earnings season is at the beginning of this week. We saw about 128 companies report. Now we're probably up to about 250 companies reporting or so, maybe a little bit more of the S&P 500, and probably about an 80% earnings beat. There was a really low bar set. So even though that beat is happening, we're seeing a lot of companies are still, even though they're beating, coming off of last year's numbers. In other words, what that means is that while they are beating on earnings and maybe even on revenue, a lot of companies are falling short where they were a year ago, which makes sense. However, right now we're in a market that nobody looks anywhere past the headline. Nobody looks at the past. We're only looking at, okay, we had a beat and what's happening in 2 years from now. So when we look at this and we see what's happening, there really isn't a much better earnings environment. Stocks expansion of earnings multiples are still moving very significantly. What's on the table? Right now, there's a discussion about stimulus. That's really the next issue with the market. Yeah, we have the Qs right now trading up about 1.83% in the morning. By the way, we see that the futures, this is where the fair value calculation comes in. The futures on the Dow are trading up only 42, but if you look at actually what was part of the 4 to 415 number when earnings started coming out, it's a little bit better than that. The ES dropping in a little bit at about plus 0.22. SPY is probably trading at about 0.55% this morning. And we see that 1.84, but only 1% up on the futures on the NASDAQ. And they're kind of coming in ever so slightly. Nothing major there. You know, the rest of the world, after our GDP print of negative 32+% fell out of bed. I mean, did you see Europe yesterday? Germany was down like 3%. The Nikkei was down 3% last night. Asia was down, even with these great earnings from these companies. It just shows you the real twisting of the index values based on a market capitalization and what's happening right now with markets in the U.S. due to the fact of the excess stimulus and the fact of the heavy weighting of these major players. The other thing that's happening right now is the U.S. dollar is dropping or drooping, depending on how you want to look at it. The dollar index has been coming down for the last several weeks. It is really, the chart looks abysmal. We'll take a look at that in a second. I'll remind myself, somebody maybe type that here. I'll put this in here, just so. I'll put this $ DXY is the symbol there. I'll put that in the chat so I remember it. And when we look at what's going on right now in terms of the next stimulus plan, there's some talk about, well, we want to increase or keep we want to keep the $600 per week. That's the Democratic side. The Republicans are saying, hey, $200 a week and maybe 70% of earnings, and maybe we'll up it and up to a maximum of $500 in October. And there's all this kind of shenanigans going on. A lot of fat in there as usual, looking at about $1 trillion. That $1 trillion number has been floated around. So what's happening is right now that a lot of people are saying, well, it's going to be $1 trillion. And, you know, the government, if they hear a number that's acceptable, like, all right, let's figure a way to spend this. Now, there's a lot of money still sitting out there that has not been used. So the question is, where is this all going to come from? We'll see. They'll take it right to the wire. Right now, as of this moment right now, there is no more additional Fed payments for unemployment. It's over. So unless there's some kind of special amendment at the last hour here to extend it, right now, as of today, it's over. So the U.S. dollar is continuing to droop as we see that Federal Reserve Chairman has been significantly talking about continuing a very low interest rate environment and continuing on whatever needs to happen. Much larger when you combine that with the fiscal policy than anywhere else in the world, and that's what's happening. A little bit of an uptick today on when we saw the PCE prices, which ticked up plus 2.2%, year over year 2.4% on personal consumption expenditures, the Fed's favorite metric. All right, what else? COVID-19, it's bad. I mean, I'm in Florida. It's bad. You know, we don't know what to do. We're kind of like, okay, let's not go anywhere. Office, home, office, home, office, home. Maybe a walk outside, maybe a walk on the beach with some masks on or something like that to get out to, you know, maybe take a boat ride if you have a boat, if you're lucky enough. Unfortunately, I am, so that's a good thing, although it's kind of now. We have the storm coming, so we got to buckle that down. What it is, much worse, and I think right now what's happening is that the direction of stimulus and what is going to happen by the Fed and the fiscal policy is all basically going to be aligned with what's happening with the virus, the direction of that. So right now we're seeing a death tick higher. We're seeing some positive tests come down a little bit. We'll see if that's because of testing issues. Obviously, next week, with the closure of many of the testing facilities throughout Florida up to Georgia, there's going to be a significant amount of lower amount of positive testing we're going to see into next week due to the storm issue. Then we'll see what happens after that. Obviously, depending on the strength of the storm and people having to go to shelters, it's going to obviously impact the spread of this whole thing. But the recovery does continue, as we talked about, right? Where we saw the first part drop and everything dropped in along. And this is economic and market related. And then we have that bifurcation, right? We still have, 25 million people unemployed right now. We still have factory conditions that are starting to slow down a little bit again. We're seeing that the service index has picked up a little bit, and that's probably going to level off a little bit. We have areas of the markets and of the economy that are not doing well, like leisure and travel and restaurants and anything related to vacations. Banking has been very soft. And on top of that, we see the K, which is the part on the upside, which is like technology and some consumer discretionary for that matter. And of course, housing. Saw that some really good numbers in the housing market this week. Big caps are still pushing the indices higher. GDP was awful. We mentioned that. Markets overheating we talked about last week. We looked at the KRI. Let's take a look at that right now, the KRI. Right now, the KRI shows that markets are at equilibrium. You see that it was starting to overheat last week, and then we saw a little bit of a move lower, took some of the excess out of it, and it moved better. All right. We have some stocks we're going to look at here. What do we got? Next week we have durable goods, FOMC. That was this week. Actually, next week was this week. I guess I didn't update that. We're going to look at Facebook, Kodak. I gotta love that one. CHGG, silver, and gold doing pretty well. Gold is up 23 bucks today. Did see a little bit of drop the last couple of days, moving back up towards the highs. Could, in fact, hit $2,000 very soon. This is with, by the way, all these good earnings reports that we're seeing right now. Think about that for a second. All these wonderful earnings that we're seeing. Stock markets near all-time highs. Things are just great. And what are we seeing? What we're seeing is that gold is still moving because people are still concerned about the trajectory of the economy and actually what's going to happen if, in fact, we don't see just the continuation of stimulus and the slowdown of economic conditions around the world. Amazon, Google, KNDI, another e-car company, SCI and SERV. We'll look at Train Technologies, which I've talked about several times, and Workhorse. All right, let's get right into this. We got a lot of stocks from you as well. Let's start out with the Dixie. $ DXY is the symbol for that. Let's look. I mean, it's up a little today, but look at this chart. So if we look at this from a Commander Series standpoint, pretty easy, if you want to trade the dollar and there's a dollar ETF, which you could trade, you could short it, you could go long it. This was a very clear signal. Let's kind of pump this right up. Right about 96, it was like kind of, all right, well, this is coming down. And if you look at where we were and you look at where we are now, what we're seeing is that we are in a continuation of this major downtrend that has been happening since April, right? We saw this consolidation point that happened right about here, a short call that happened, and that was right inside these, a couple of them. And then it kind of continued on. We saw a beautiful short, a lot of things happening on the screen right now. Consolidation throughout this region, and then another nice drop. So this has been a very significant overall short kind of move right now. And if we kind of push this back a little bit further, and actually let's go and take our time frame and look at this even longer. Obviously, there was this big spike in 17. We saw the fall. Kind of looks like what's happening right now if you think about it, right? We saw this big spike when there was some issues that were happening, concern, and then this big fall. I mean, look at this move. Where are we going on this? Well, if we want to draw a line and connect, we always look at this. We look left, right? That's the thing that we do. We look left when it comes to our radar screen, which is a multi-time frame radar screen, the only one that's available on the trading app store and on our charts. We want to look for areas of important support or resistance. And if we take our line tool and simply kind of go back and draw a line that connects a few of these, you can probably find some in the back. I would take it up a little bit higher if I really wanted to do that, and see where we are right now, right on that level. Okay, that's on a weekly time frame. Now on a daily time frame, when we look at this and pull this back a little bit, there's not much here. There's a lot of black, and what I mean by that is it's kind of nothing happening. We always look for those spaces that there's nothing when I look from right to left, and this is going back the full year-to-date period. This is just a lesson on any stock, on any currency, on any ETF, any future. Always look left. Say it with me in your mind. Look left. Really important. We're looking for holes. We're looking for areas of zones that have the potential to be non-consolidating. In other words, we want to look for vertical moves that are very quick. Horizontally, we see that oftentimes there is the ability for a stock, let's just say, to move in a very a significant range that may be very tight or very wide, but consolidate through time horizontally. That's not the kind of trading setups that we want. We want to see trading setups that show this to the bottom right here, where we have very fast vertical moves through time. That's where you're going to make a significant amount of money. And by the way, I got some great emails from you this week thanking us for putting the software out. And by the way, and I'm going to tell you again, we are the #1 highest rated and overall ranked for users on the TradeStation Trading App Store. And I want to thank everybody for helping us do that. But if you are not a user at this point, you could simply go and get a 10-day free trial over on the TradeStation Trading App Store. And I will give you, I have a link here somewhere. There's a variety of different indicators, but I'm going to, what we're talking about here is the bread and butter of what we use on a regular basis. I'm going to put that inside of the chat there. You can just click that later if you want. All right, let's take a look at some of these other stocks that I'm looking at. Facebook breaking out today to close to an all-time high. Been consolidating for a period of time. So we look at this consolidation, and if you don't have an annotation tool like I have using this, we could just go down to the drawing. You can put your drawings on, or right-click and click drawing. It's been consolidating for a while here inside of this range after it really had a nice move. Now, one of the things about Facebook, they've been complaining, kvetching, and crying about the fact that they're going to have lower earnings in the future and lower revenues. They did it again this one. They guided very conservatively. And we saw a lot of discussion by many different companies saying, hey, you know what, we're going to pause. We're not going to have this. We don't like what they're doing. And the concern about a pullback of political advertising because Facebook may not do it. Meanwhile, the company beats. Everything seems to be looking good. Stock up close to an all-time high. It will be an all-time high, I think, let's see. Yeah. Right now it's on an all-time high on a closing basis. It has, let's see, 250, 184. Has a little while to go for all-time high on an intraday basis. But the stock definitely was in a consolidation. It was tightening down. It couldn't get below this level of 229, and it did, in fact, break up today. Look how it's been consolidating and dropping right on the line. We saw a little hiccup in July, and obviously this consolidation led to a lot of people piling into the short side and looking for an opportunity that if they missed, taking this back down to the $200 range, that we see that there's some support. However, they did, in fact, beat, and that helped out. KODK, $750 million gift in the form of a loan to this company to retrofit their factories. A lot of people got into this. It's going to be looking at creating generics and the materials for generic composition of drugs here in the United States, providing less reliance on India and China. Well, everybody got really excited about this. Well, meanwhile, there's a $100 million company that gets a $750 million loan. We have no idea the business plan. We have no idea what's going to happen here. Stock goes from like $2. Can't make this stuff up. Maybe look at this on a weekly basis. It's going to look even weirder. Yeah, there you go. It goes from $2, kind of hanging out in that $2 range forever. Goes to 60 this weekly. Goes to 60. Backed off right now at about 25. I don't know where this goes. Does it come back to 12 or so? If you want to play something like this, more power to you. What you would have had to do is take in your chart here and maybe, actually, let me pull this back to a 60-minute. I think we'll get a better look. Not really. This was on 728. You got this move. You would have to be quick into this. You probably would have picked it up, at the 33 level and just got, maybe slammed up, taken that profit and gotten out. There's really not much you can do with this. I mean, you want to go to a 5-minute chart, maybe, and you would have known this if you saw this. Let's see. A couple of different, there's this breakout right here, and you would have rode this up, but probably rode it down a bit. But still, from $20 to $30, if you would have gotten that, That's a 50% return on it. But these stocks, you know, are more of the short. Once the shine wears off of them and there's less interest, a few days pass, kind of looks like a shorting opportunity. Chegg, on the other hand, let's take a look at this back to daily. I use daily because I like to see what the overall trend is. And we see that Chegg yesterday once again popped through its upside here. We see some major gaps. This is an e-learning company. They do the books online for many colleges, universities, probably now for high schools and even elementary schools, in the fact that, you know, we're not going to have actual books maybe for a while. So this conversion to digital on books is really important. What we see when we look up top here on the daily is a long alert, right? We see this long alert on the 240. We see that it's long for 7 bars here on the 60. Now, there was a short yesterday, right? We saw that yesterday on the 30 that happened. Chegg, let me get back. Long profit, excuse me. Long profit on this. So we saw that nice run from 73 to 79 over the last few days. Chegg is now up another $2 and moving. And there's just green sky, or in our case, black sky, which is actually good for us. Going when we look left, there's nothing here. Interesting play. That one also company symbol LRN, also TWOU. These are all kind of learning companies. Big breakdown. This was a, you know, I looked at this back when it was like in the 13s, back up to 45. It broke down substantially. Been a lot of gapping in this though. This stock was at once 90. So when you look at this, it's kind of a great look right here. But I encourage you to look at many different time frames. The more time frames you look at, the more confidence you get in your particular trading on a name. So if you're seeing that there's a culmination of, for example, let's take a look at IWM. IWM right now has been in a consolidation. Interesting with all the things that are happening right now. We see that futures are ticking up across the board here, but look at this. Small caps are down a little 33 basis points today, but they're down. They're down. You look at EEM right now. It's up 0.07 today. However, you know what? That may only be because of our future move right here, and we got to watch that. And the China ETF up 1%, which is really good. Japan was down, so kind of weighing on all that. Silver. Some people have asked about silver. We talked about this the last few weeks as a great opportunity. Now starting to consolidate right here. Silver is a confirmed on the short side, really, but I would not necessarily play that right now on the short side. You're going to have a confirmed short that would be for today. You're going to see that an opportunity to get in on that short a little bit higher at this point. However, I would look at this also on a much longer term basis. I mean, on a longer term basis, we look back. I mean, there's nothing here. That also means there could be a new altimeter that will form. There could be, when we look at our radar, for example, when we put that on, we see a really weird, really long tail with a small little button in the middle here, which means that this kind of move right here that we're seeing on very low volume could collapse very easily. So I'd be a little careful with that. Probably a little bit of a same look, but a little bit lighter with gold. Gold, also the same thing. You have a confirmed long position that got in about right here. I think we got in 156 after a couple of spits and starts here, and then went up from 155 to up to 183. Still in a confirmed long on a weekly. Let's look at this on a daily basis, though. Daily basis says, hey, you know what? It's run its course right now. Up about 0.48%. Okay, interesting. But, you know, look here. Look at this gappy zone right here. You see that? That gappy zone kind of right there, right here. If it gets below, I would say probably the 182 range. You have a real important consideration if you're long gold, because you could see this really backtrack very significantly in the near term. And I think that's something that you really need to pay attention to. What else do we got here? Shake Shack down about 5% earnings today. This is really kind of interesting. Could not get above its major level of resistance. We got a big fatty right here with a consolidation. Currently trading right now at about 52, so right back down to the bottom below its important level. These yellow lines are very important. They are high volume nodes inside of the market profile. That is very important to look at, and that kind of coincides with right about where it is right now, just a little bit below. So the support at about 52.66. You know, the problem is it's a pretty ugly looking number. They had a big loss. Amazon, let's see what time it is. Okay, Amazon. Trading at 32.24. Not at, I don't think it's at an all-time high yet, so kind of butting a little right there, right on its level of resistance, very close to it. on a daily basis. Obviously been in a consolidation for now. Still going to stay inside of a consolidation in a wide range from 28.72 up to 32.26. Pretty expensive. KNDI, I brought this up because it looks like Kodak in a way. Went from about, I don't know, it was kind of trading at about $3, $4, went up to 17, down at about $7.99 right now. Big reversal yesterday off of this. They had an announcement about an announcement about an announcement about a potential truck being built or something like that. E-truck. SEI, interesting. We like this stock from a fundamental standpoint, but look at this one. This is a company that is probably one of the largest producers of caskets and burial services, cremation services, own funeral homes, also burial plots, etc. Look at this incredibly long consolidation. If you could kind of envision this and take a snapshot of what this looks like right here, this really long consolidation between 35 and 41 couldn't move since March. After the significant drop that we saw here, couldn't get past it. Every time it went up, it got knocked down. Every time it went up, it got knocked down. And people were like, hey, wait, can we do funerals? I don't know if we can do funerals because people can't get together. Well, companies have a way of adapting. And obviously, as soon as the pandemic was starting to get over, well, this started pop. They came out with earnings. Look at this number. Right now, trading at $45, right up into close to its resistance level, taking back a lot of that. So a nice little move on this. Has a long way to go, obviously, but right now we're starting to see a little bit of resistance point. Yeah, I would say a little bit of consolidation inside this whole resistance. Again, looking from right to left, we want to see if we can connect some lines. And right there, 45.96 is probably a little bit of a top end on this. Another one that's really interesting to look up is SERV, ServiceMaster. Again, a lot off of its high, but this company does things like owns Molly Maids, cleaning services, janitorial services, and just picked up some important sanitation business and a company that's going to do sanitation for when people have to go or maybe go back to work. There's going to be a requirement for regular sanitation. But the point here is currently looking like an interesting breakout candidate. You start to get above this level. Yeah, there's nothing here. Nothing on the bottom side here. We got above this major congestion. You start to get above, I would say 42, but definitely above 42 and a half. You have a big gap zone that we see that there's nothing going on right here. And you definitely have the opportunity up to 55 from what I see. Train Technology, interesting company, but a little pricey. Workhorse, something I've been looking at. Another one of these e-truck, e-car companies. Has a really interesting support level right about 15. If you can hold 15 and have the opportunity to bounce, you're in good shape here. If you do get above the 17.5 number, the opportunity to move back to 19 to 21. Cargo, panel truck on the E side. All right, we're going to take some of your stocks right now. STNG is somebody asking about. Scorpion Tankers. Again, I'm looking at this only on a daily right now, but this is a really nice consolidation down here. Where is it now? Trading down a little bit. Can't seem to get above this 1390 level. I would like to see it get above 1390 before I got involved in this. I think it's going to probably bounce around in this consolidation. If I take the radar off, I can put the aileron on also, which is a different package. And I'm going to put that on just easy as a click like that, turning it on and off on your toolbar. Make sure to have that enable studies on your toolbar by right-clicking. You can see. Let's see how we do this. Going over here. You can customize. There's a little button on the end. Customize your toolbars, and you can drag enable studies that are currently on your chart in there. And I like to do that because I like to turn them on and off a lot of times during the day to see what's happening. So we may run a little bit over today. Hopefully that's okay with everybody. But I think you want to get above this level, about 1375. 1390 is what I said earlier. PFE, Pfizer. So Pfizer is another stock, obviously, in an area that is really good. Our aileron shows us that we had a real problem with momentum. Momentum picked up. Really good look, all green on the aileron. You can add the aileron chart. It's only a couple of bucks more, and it really makes a really nice complete package because it gives you not only important support resistant from the Commander series on that and all the things that you see on the chart, but when I added that, it also gave me the momentum. Using those to do together, again, high confidence trading is what's the most important. Right now, I don't know, this isn't looking so great. Consolidating inside of this range. Looking at 39 as a top level and a lot of resistance there. Simply draw a line and we got a lot of resistance. All you have to do is when you look at this is take a look and draw that line. Right where we are now. All the way across this big resistance on this. So it has to get above that. I think you may see a consolidation probably down to the 36.70 level. A couple other ones we have. I thought I saw it in Intel. Intel looks crappy, doesn't it? Just terrible. You got some support here, but I don't really see. I mean, I got to look. I got to search for where the support is. So maybe this batch right here. We got Intel holding on to that support level right here. I would wait for a turn. I mean, look at the aileron. It's telling you, no. It's not even turning really yet. We're just starting to see a little bit of a bump here, even on these great news days. SSD, I'm not going to really talk about because that's SPY. Oh, no, sorry. SSD is different. Simpson Manufacturing. Looking good. Yeah, all-time highs. Pulling back a little bit today. So that's it. Everybody, you should go visit TriggerCharts.com. We'll have this up on our YouTube channel later. Make sure to look at it, like it, do all the good things that you do. Tell everybody about Trigger Charts. Make sure to get your 10-day free trial. And thank you for joining us. And I will see you again next week. Thanks so much.